Canadians love our real estate, and if you've watched this channel for any length of time, you realize that I believe that Canadian real estate in aggregate is overpriced at the moment. There's lots of reasons why that is, and if you don't believe me, there's other great resources online that talk about why Canadian real estate in aggregate is overpriced. But that's not what this video is about today, because people don't buy real estate in aggregate, they buy individual units or individual properties. And so what we want to do today is something a little different. We want to talk about how people can invest in real estate intelligently if they insist that they want to buy. So that's what today's video is about, a guide to condominium purchases. So the first order of business is to define what a condominium actually is, because there's some misperceptions out there about it. So a condominium can be a high-rise, it could be a low-rise, a townhouse, it could be even a detached house. You are governed by a condo board and they tell you what you can and can't do oftentimes. And so it's a different type of ownership structure rather than a type of building, and that's the first thing to think about when you decide you want to buy a condominium. Condo life isn't a cost-free life. You pay money into the condo board every month, and those fees go to defray some of the costs associated with maintaining the building that you own. The first piece of advice, like any type of investing, you want to lose the emotions when it comes to investing in condominiums or any type of real estate or any type of asset for that matter. If you have this idea that you love real estate or you get emotional about it or it gives you a warm fuzzy feeling to own it as opposed to rent it, or you believe that it always goes up in price, those are sort of emotional bits of baggage that you want to jettison, because they're going to do you harm sooner or later, because that also leads to terrible things like bidding wars and all that other stuff that people come to later regret. Real estate, remember, can cost you huge amounts of money and a huge emotional pain, and a way to protect yourself is to strip the emotion out of the purchase decision up front and be as critical and analytical and coldly rational as possible. The next piece of advice about buying condos is you want to avoid pre-sale condos or condominiums that haven't actually broken ground yet. You never want to buy something you need to live in from a piece of paper or a foam core model or promises from a real estate salesperson. There's lots of horror stories right now coming out in the press about how people have been basically lied to about what they're going to get. People, when they finally do move into the property, often years after they thought they were going to, they suffer size shocks, and not in a good way. Ceilings are often lower, the workmanship can be shoddy. You oftentimes have to pay expensive occupancy fees that don't do anything for your mortgage while you wait for the building to get registered. All this other stuff associated with the pain that is the pre-sale condo. So if you can, buy a pre-owned condo. Buy one that actually physically exists, has corporeal form, that you can actually go around and judge. Garth Turner did a great piece on deceit parties and VIP parties where they offer you champagne to froth you up about buying a particular condo. If you are in one of these parties, run, don't walk in the other direction. Avoid pre-sale condos like the plague. The next piece of advice, and it's relevant to any investment, whether it's real estate or anything else, do your homework. Find out whether the builder's still in business. Find out what other projects the builder's done. Find out if those projects have any complaints, any major issues associated with them. Pay attention to the issues around closing costs and closing dates. So the closing date is the day that the building is registered by your builder, not the day that you move in. So there could be years difference between the two where you're paying expensive so-called phantom rent or occupancy costs that don't do anything for your building. That's one more reason to avoid pre-sale condos, because that's typically a problem with them. Understand exactly what the cash flows are associated with you putting up money to actually move into this place and start paying your mortgage. The next piece of advice about condo buying, don't even think about flipping. The idea of flipping profitably, that real estate always goes up in price over a short term as well as a long term. That's a crazy idea, and we'll leave that aside for other videos where I've talked about it at length. The fact that Canada Revenue Agency now has flippers in their crosshairs, so oftentimes people will lose their GST rebate if they have one. Their capital gains exemption will be denied. There will be tax consequences to flipping, so don't even think about trying to do that. Avoid flipping. Next piece of advice about buying a condo is that you want to pay close attention to the fees. Now, condo fees are mandatory fees that you pay every month into the condo board in order to maintain the property and maintain common areas, do snow removal, trash removal, and so on. And the great thing about condominiums is that you can turn the key and go away. You can leave the country for a month on a vacation, 2 months, 7 months in my case, and not worry that the pipes are going to freeze. You know that your building is being maintained in your absence. Now that maintenance obviously has costs associated with it. These fees may go up over time, whether that involves sheets of glass falling off your building and landing in millions of shards on the street below, or cladding or any other thing. Fees that you pay every month are going to vary depending on what sort of condition the building's in now and what's likely going to happen to it in the future. Does the condo have a pool, a gymnasium, yoga room? Are you going to use these things, and is it worth your money to keep them, to maintain them? If your pool, for example, costs you $36,000 a year right now, is that worth it to you? If you have to share that $36,000 expense with a bunch of other people, is it worth it to you to have a gymnasium in your building, or do you have a gym membership somewhere else, and so on? So these are ideas that you want to think about while you're purchasing a condominium. You want to understand what the fees are now and what they're likely to be in the future. Another thing that's very important when looking at fees associated with condos, check out the reserve fund and the reserve study. Have a lawyer review that, because what the reserve study is basically a document that details pretty thoroughly what the building's repair history has been and what's likely going to be coming down the pipe in terms of repairs for condo buildings in the future. So have an expert look at that stuff before actually signing on the dotted line. Continuing with the theme of fees, if your building is less than 2 years old, you want to keep an eye on that as well, because typically the rule is that the builder is responsible for any maintenance or any physical structural changes to the building for the first 2 years after the building's been registered. What will often happen is fees will be set artificially low, and you want to look for fees that are less than 40 cents a square foot. Those are, in my view, a little low. Be on the lookout for artificially low fees or unrealistically low fees, because they're not going to last. Next piece of advice about condo buying is that you want to calculate your own price to rent ratio. The big idea with price to rent ratios is to understand what the thing would cost to rent versus what the thing would cost to buy. Like we've said a few times on this channel, Canada's price to rent ratio is at freakishly high levels at the moment, but your situation is obviously unique to you and different. So what you want to do is you want to calculate your own price to rent ratio. So the way you do that is by looking at a neighborhood that you want to buy in. Look what the rentals are in that neighborhood. Look what the rental is for a comparable property to the thing that you're thinking of buying, and then saying, okay, could I actually tolerate renting for a little while, or do I have to buy? Do a realistic assessment of what the costs are on a monthly basis, renting compared to owning for yourself. And if you insist that you need to own because you want a piece of the rock, even if you acknowledge that this asset class is overpriced, maybe you're getting a little emotional and you want to sort of put some cool water on that, dial that back a little bit. I know Toronto relatively well, and there's actually some great bargains to be had in the rental market here, where you can rent a space for much, much less than it costs you on an all-in cost month-to-month basis when you quote-unquote own. A general rough and ready guide is if it's 15 times or less the yearly rent, then it's a good idea to buy it. And if it's over 15 times, it's a good idea to rent it. Work out what your own price to rent ratio is as per the neighborhood that you're interested in owning, and see if it actually makes more sense for you to rent. Next piece of advice about buying a condominium is that in addition to calculating your price to rent ratio, you want to calculate your price to income ratio. Being 1.5 times median income makes houses affordable, and I think when it's 5 times and above, houses are in bubble territory, and I think we're north of 5 in Canada right now in aggregate, certainly we are in Toronto. But your circumstances are different than the aggregate, and talking about medians and modal relationships and all that stuff, that maybe isn't relevant to you. So understand, what your circumstances are in terms of your income now and what your income is likely to be in the next 5 years when interest rates are a little different. And understand before you buy any piece of real estate or any asset again, what you can afford. And understand that interest rates are going to change in the next 5-10 years. Factor that into your calculation as well. I'm surprised by the number of people who actually don't do that, so that should be, at least on the checklist of things to do before you go out condo hunting. Next piece of advice when it comes to buying a condominium is to not overpay for a glamorous neighborhood or a good location. Actually, for any asset, you don't want to overpay at all. Don't assume that because you live in a desirable neighborhood, you're protected from a fall in real estate prices. The following infographic from TorontoCondoBubble.com says, shows pretty clearly that some of the most Tony or nicest neighborhoods in Toronto are the most expensive at the moment. The nicest and most fashionable neighborhoods in Toronto suffered the worst in many cases in the last real estate bear market. So what's the lesson? Obviously the lesson is that a nice neighborhood, a desirable neighborhood, is not going to protect you from a massive loss of capital, so be careful about that. Last piece of advice about buying a condominium comes from a former landlord. To those people who want to be a landlord, there's this principle in behavioral economics called the Endowment Effect. Basically what it means in a nutshell is that we value those assets that we happen to own much more than the market would in general. So there's a lot of people out there thinking that they can rent their beautiful condo for much more than the market rent in their neighborhood will bear, and that's actually pretty painful. So you tack onto that the fact that in some condominiums you have surprises like glass shattering and falling into the street below, shoddy workmanship because these things have gone up quickly, repeat of the Vancouver experience in Canada or in Toronto right now, and so on. So there's a lot of pain that condominium buyers are going to face in the next 5 years in my view. And if you're a landlord, or if you want to just cover the cost of this thing with rent, just understand what the supply and demand for rental units is in the city that you're buying in, and understand that you're probably not going to get the rent that you expect. That's the first thing. The second thing is being a landlord's a pain. I was one for 10 years and I can tell you I actually had really good tenants, but it was quite a headache sometimes. So it's just maybe not worth the emotional stress and the financial stress associated with it. Lastly, I don't have a crystal ball. I can't tell you when the real estate market in Canada is going to drop or when the condo market in Canada is going to collapse specifically. I can't time it. That's really not how bubbles work. But I can say that valuations in aggregate are really quite rich at the moment. I can say that I'm in no rush to get back into the real estate market. I'm going to wait for values to come down. And if that involves renting for 6 months, fine. If it involves renting for 5 years, fine. I'm just not going to overpay for an asset. As sophisticated investors, we should have time on our side and we should never overpay for anything, because that's the road to economic ruin. Be patient and understand that if something's a good investment in October, it will be in November again, and December, January, and so on. You don't have to feel rushed ever when it comes to buying anything, including real estate. Don't be emotional about the decision, and don't feel ever pressured by a real estate professional or anyone else to buy because of the fear that you're missing out. That leads a lot of people down a very, very dangerous, expensive path. Last thing, we've gotten a lot of new subscribers lately. That's very gratifying. Thank you very much for that. That actually gives us some real incentive to keep going and keep doing this stuff. I'd like to particularly welcome those people who've come over from Reddit. I love participating in conversations over there, so if you see anything interesting on this channel that you want to repost on Reddit, just let us know in the comments that you've done that so I can engage in conversation over there, because I love talking to those people as well. So again, thank you very much to those new subscribers who've joined us recently, and for those people who've been with us for a very long time, thank you for your continued support, and I'll see you next time.